Well, hello, everyone. I'm Robert Nordlund from Association Reserves, and this is HOA Insights, where we promote common sense for common areas. This is episode number 61, and we're presenting this as a live stream, as an Ask Me Anything type of show. So as you can see, I'm here with regular co-hosts Kevin Davis and Julie Adamen to answer the questions you ask to equip and encourage you in the hard work you do as community association board members. Now, you can ask us anything, but we don't think we'll be able to get to all your questions. And there are some specific questions, legal, accounting, things like that we probably aren't quite qualified to answer. But we're here as a resource for you, ready to help you in your job as you do for your association all across the country. Kevin and Julie, are you hearing Kathy's prompts?
Well, no.
No.
Did you ask people to put their questions in the chat?
I did not.
Okay. Yeah. Let's get people putting some questions in the chat. In the meantime, I'll give you started on a couple of questions we got earlier. Let's see. We'll start, Robert. Can you briefly discuss the guidelines and examples of the differences between reserve items and capital improvements?
Sure. That's probably an example of how we're going to do this today. We've got three people from three different backgrounds. Reserve components have to pass a three-part test. They need to be a common area maintenance responsibility, they need to be reasonably anticipated, and they need to be above a specific cost. So a capital improvement is a new asset, so it fails test number one. Now, there's no responsibility or no requirement to replace like for like. So if you are upgrading something aesthetically or technically, if you have a new machine for your gate system or new carpeting, or you go to hardwood flooring for your clubhouse, you're not required to do exactly like for like. So you can do some nominal upgrading in the process when you do your reserve components, when you do your refinishing or refurbishing or replacing. But outside of that, basically a new asset, a new thing that you bring into the association, that's a capital improvement and not an appropriate use of reserve funds.
All right, I have a question here. Is the HOA allowed to have a locked ballot box for owners to place their ballots?
I'll take that, I guess. You know, I don't see that there's any reason they shouldn't be able to do that, as long as the ballots, well, typically the ballots, once they've been counted, all need to be shown, available to the homeowners to look at. There are some states, California being one, and I'm sure we have people from California listening because it's such a large state, is that you actually have to have basically a third party run your elections, so it's probably not appropriate there. But for other places, no reason really not to, as long as they're being counted and signed appropriately, and then they can be inspected by the homeowners upon request.
Great answer. I'm still waiting to see if people are going to be adding questions to our stream here. We've got some volunteer board members. We've got people from Florida, Washington, LA, Arizona. So yeah, get your questions in the chat.
Yeah, I see a lot of people from Florida. I know there's a lot of stuff happening in Florida. I know you have some questions for us in Florida. It's challenging for right now for people in Florida, that's for sure. Well,
I do have a question that seems like it might really be for all of you, and maybe you have different opinions. This board member wants to know, why do you dislike special assessments so much?
I tagged that one. I saw that. I tagged it.
You go first.
Now, he went on to say our membership prefers one-time assessments rather than continue to increase the regular monthly assessments. So yeah, factor that in.
I'll say it's not that we dislike special assessments. It depends on what your community is able to do. So I would say most communities don't like to have that big fat special assessment come right up. They'd rather pay a little. Well, it's it's easier for a board to raise assessments appropriately every year than to have to wait, 8 years and then do a big special assessment. That said, however, communities that are affluent and their clientele, meaning the homeowners, are affluent, I've know ones that have done that very successfully. They just keep the dues lows and they special assess everybody $20,000 or $30,000, and people write the checks and they go off happy. So it's not that we dislike them, but it's just that overall in the industry, our experience tells us that they generally create a lot more unrest in the community than incrementally going up.
Yeah. Let me add something into that. It's a very good question, because not only people who have money, but people who are elderly rather have a special assessment also, because they don't care about what's going to happen 10 years from now. I don't care. I don't care 5 years. You want some money, I'll give it to you right now. But the issue for me is that people get upset when you tell them it's special assessment coming. And no matter how large it is, how small it is, you have people in there who are going to say it's unfair. Do you have the authority to do it? These are all the reasons why you shouldn't be doing it. And then it creates angst in the community. When angst creating community, that's where you have the issues. And special assessments at one area that really gets people upset, and they really want to challenge the board decisions and their authority and how they're going to act. So that's why I don't like it.
Yeah, and things start to metastasize after that. Now they're looking at this, what are we going to look at over here now? Why are they doing that? It can just grow way out of control. But for communities that it works, do it.
Yeah. I weigh in on the side that I don't like special assessments. I think among my client base, they find them disruptive. I think they're also a problem because most governing documents require the board to collect assessments to balance the expenses at the association. And so if they're not collecting assessments, if they're pretending that the costs are low and they're gradually getting behind every year and have to do a big catch-up special assessment, they are not in compliance with the governing documents, and they're not representing the true cost of ownership at the association. You're lulling people into a false sense of security that it's only this expensive to live here, and there's nowhere near the truth.
Let me add one more thing to what Julie was saying, is that it does make people think about other areas. They said, not only you're not doing this correctly, but what else you're not doing correctly. What are you doing for our money? We need to see your budget. We need to see your financials. We need to see who the board members are. It just opens up doors for everything else.
All right, I got some questions here in the chat. This is about that financial notice to the federal government. FinCEN.
Yes.
They wanted to know, is it on hold or is it going to be law? And it might be harder to get board members that want to reveal their information.
Let me take that one. This is. I just did a webinar on that one 2 weeks ago on CTA, and it's a huge problem right now. One jurisdiction found it unconstitutional, but only for that one little small jurisdiction and for that one little small area. I think it was out. I forgot what state it was. I'm not going to. And it's still alive, and it's still a problem. You have associations who do not want that information given to the government. People don't want it given. However, as board members, certain times you don't have a choice. You have to obey the law. If you don't, there's fines, penalties, and other issues. So this is one of those things. Again, I'm not a lawyer. I'm not giving legal advice. But when there are, bills out there, legislation out there said this is what you have to do as a board member, you're better off doing it and having the unit owners get upset with you than not only unit owners get upset with you, but the state and the feds and everybody getting with you.
Right. Kevin, why don't you explain what it is to everybody? Because I don't know that everybody on here actually knows. I find a lot of board members haven't even heard of this yet.
Yeah, this is really a complicated issue.
Yeah.
It was by the January the 1st of this coming year, you're going to have to start giving personal information out to the federal government. You got to give personal information. That is names, phone number, addresses, personal identifiable information.
ID,
All it's very, very complicated. But you don't have a choice. It's that every unit owner there, every owner in there, you have to give that information out to. And the reason why they're doing that has to do with in terms of it's a money laundering thing. It's a money thing. They think people are watch out for terrorists and everything. And CAI has been fighting this. They have community associations exempt. Right now, you do exempt nonprofits, 501c3s, but community associations are not a 501c3, so they don't fall into that.
Now, I believe CAI has filed suit, have they not?
Yes,
Yeah,
they have filed suit.
Yeah, they filed suit. Yeah.
I can give you a heads up. Next week, we're going to have episode 62, and we pre-recorded that episode with Dawn Bauman, and she'll go into that in a little more detail. But it's CTA, as Kevin said, it's the Corporate Transparency Act. It's theoretically a good thing for our country. It's anti-terrorism. And so leaders of corporations need to say exactly who they are. And that's fine if you're a bigger organization, but CAI is lobbying hard on behalf of community associations to exempt board members at the 375 or 400,000 community associations across the country from having to one more onerous requirement to become a board member at your association. And one more thing that you could get wrong, and it has no bearing on terrorism or how well your association is being run. So it's well-intended legislation that just does, it's right now it's catching up community associations in the mix, and CAI is trying to throw away the community association fish out of the net.
Okay, great. All right, I got a question here from Troy. For the threshold test for let's see if I can pop this up on the screen here. Can you see that? There you go.
Okay. That's you, Robert. Can you see it?
Yeah, I had to reduce the chat that was in the middle of my screen. Okay, for the threshold test for reserves based on 1% of the operating budget. Okay, that's a soft guidance. Should we first subtract pass-through amounts such as utilities and property taxes? No. What the 1% test that gives you a kind of a guideline for where do you start with reserve component significance. That's the third test. Is it significant to the association? Look at your overall budget. And if your overall budget is $1 million, 1% is $10,000. That's kind of where you start to think, is this significant to our association? You don't excise things. It's 1% of total budget.
Okay, good to know. Let's see. Real identity. Okay, here's another one. I'm just popping them up as they come.
Okay, I guess one's for me. Okay, our current board was told to get multiples, at least 3 bids. The current insurance, you have to obtain bids from at least 3 different vendors. I wanted separate brokers. Okay, insurance is complicated right now. And the reason why, because you have more demand than you have supply. Okay, and we have more demand than supply. Everybody's going after the 4 or 5 companies out there that's trying to get these quotations. So it's hard to go out there. Historically, 5, 6 years ago, 10 years ago, you can have 3 different people getting 10 different quotes because you have 10 different carriers. Right now, you don't have your direct writers, your State Farm, your farmers, your dependable ones. And you don't have, so you're limited in terms of who is going to give you a quote. So you have to obtain whatever you can get, and maybe one person can give you 3 quotes as opposed to going to 3 different people getting different quotes from each one.
Interesting. Okay, great. All right, let's see what I have here. This looks like maybe a Julie question.
Okay, we have the same people that claw to be on the board, rotate to committees and back to the board. They don't allow visitor to committee meetings, and they have given a really kind of funny name to their association, which will remain nameless at this time, but it is in Florida. So Florida Man writes, well, that happens. And unfortunately, HOAs are just a microcosm of any political system. And a couple of questions I would ask are, the people who are trying to be on the board then rotate to committees, are they doing good? It doesn't say that they're not doing good. It just says they keep rotating around, and maybe they don't have enough volunteers. I don't know. Committee meetings, they're saying about committee meetings, no visitors. I think I don't know the law for Florida exactly, but I don't see why they should be in secret. But I would encourage whoever is writing this to volunteer for a committee or to volunteer to be on the board and run for the board. So you're in the know. I don't know if you have tried to do that and they won't let you on. Sometimes people say that, or you're just making these observations. So going from the former, I'll say, get yourself on the board. I would love to, they probably want to see new people anyway, new blood on the board, and then you'll know exactly what's going on and why they do what they do. The little name you gave your association could be happening. Sorry, I won't tell everybody what it was, but it was maybe an inference of malfeasance. But I would say once you're on the board or in those committees, you often have a closer perspective, and then you'll be able to see if that is indeed the truth or that's simply a perception. So get in there, volunteer your time, see how you can help, and to maybe turn that perception around.
Yeah. I've got another one here about HOA board member for you. How to best deal with a problem HOA member who is consistently antagonistic toward board members at board meetings and toward the HOA. Employees, manager, facilities, people, contractors.
Do you want me to take that, guys?
Yes, please.
Okay. Yes, please. Hey, well, first of all, I mean, I'd like to know what the level of antagonism is. Let's just say it's pretty good for right now, because some people think small amounts are antagonistic and other ones are really big ones. So let's put it this way. As far as harassing or being antagonistic to the board members at board meetings, unfortunately, that does happen. It's not unusual in our industry. As I said, we're simply a microcosm of any political system. However, boards can set certain guidelines for decorum at their meetings that is for them as well as for the attendees. So there should be no talking once the board meeting starts, no talking in the state of Florida for sure. I think Nevada, they allow that. But in Florida, no talking, no answering questions from the people. But if there's going to be an open forum, make sure there's an open forum either before or after the meeting. Give everybody a set time to talk, and it's 5 minutes or 3 minutes or whatever it is, and then they can feel heard, but they cannot continually interrupt. Now, as far as being antagonistic to your staff, you can have an issue there with a hostile work environment, and I would speak to my general counsel about that and see if there's something that you let them know, him or her know exactly how far it's gone, and it may be appropriate to send this person a letter and saying, a cease and desist on dealing with the staff like that, and then go from there. I mean, if they won't stop, you can get a restraining order on people. That sometimes takes it into a level you may not want to. But the board can set parameters on the meeting, and they can also set parameters around the general manager and around the staff. And if it goes beyond what they should be doing, meaning the homeowner coming in and harassing people, then you might need to get counsel involved.
Yeah, let me add something to that. A good point. But we're seeing a lot of this now, because we live in this post-COVID world where people are at home. I mean, historically, you get up in the morning, you go to work, come home at 5 o'clock, you have dinner, watch Netflix. Now at 2 o'clock in the afternoon, like for us, it's 3 o'clock in the afternoon in LA. And, I have a handyman out there and it's making noise with the blower. You can't hear him, but, we all of a sudden we get upset. We're home at 2 o'clock or 3 o'clock in the afternoon, and the leaf blower is gone, or the kids are playing pickleball, or the people are playing pickleball out there, and so the anxiety level is higher than it was before. Yeah. So that one person in the condo who was really more aggressive than normal, it's a problem right now. And so just be aware of it. And I guess you gave really great advice in terms of just you got to be able to handle it and understand that this is the world we're living in today.
It is, and Kevin's not wrong at all. That it's been really the dealing with the people, everyone, to a person who works in the HOA management business, whether they're business partners, board members, whatever, the managers, everyone is just, everything's dialed up to 11 billion. So we went from COVID, we came out of COVID, then we come into an election year, and it's just nuts.
Mm-hmm. Which is probably the second part of it too, is that we do live in this 50-50 world where no matter what happened, I live in my association. There's a certain group of people I'm not going to like just because they have a flag in that window that I don't like. And if you can say there's no flags allowed, they said, well, it's inside my unit. It's not a flag, it's a banner. I mean, we've heard all kinds of things. So it's, again, it's this battle we are fighting right now with each other, and we have to figure out a way to make that stop.
Yeah. Well, we've got, Kevin, one thing I've liked about so many times we've spoken on this podcast, you talk about lowering the temperature. And yes, there's sometimes we may need to get legal counsel involved, but if we can, I think our counsel is to make sure our board members hear that we are encouraging smiling. We are encouraging being polite. Like Julie said, make sure they feel heard. And then there is the extra requirement on the board that you have a thick skin and that you document things well, because if they go to their attorney first, you're going to have to show what you did and why, and that you had to answer 53 times in the last month when they complained about something. And pretty soon the case will be pretty darn clear, and hopefully they will get upset and leave, because a community association is a portable place. And that is perhaps the ace up your sleeve. Kill them with kindness, tolerate them, be nice to them, and they will make their own bed, and they will likely feel uncomfortable there, and hopefully they will sell and go.
All right, Kevin, this is a challenging one for you. I'm on the board of an 8-unit condo in Washington State. Our insurance carrier, along with 4 other big companies, are leaving the state for HOA insurance. Do you have any best practices in finding new policies?
Well, I would say start with best practice of being understanding that you have risk out there, and you have to make sure you maintain the property. Make sure you enforce the rules. Make sure you do your job, because it is a huge problem out there that insurance carriers are pulling out. And again, the main reason why there's not enough supply out there, and not a lot of supply, because the number one reason right now, and you're seeing it right now, is all the disasters that we're having. The hurricanes, and this is supposed to be like the worst hurricane season we had because of warm waters. And right now, insurance carriers can't predict how much money they're going to lose. You have the wildfire. We all hear all the stories, but insurance providers can't figure out how much money they're going to lose. And so they say, we can't write it at all right now until we figure out a way to handle a lot of these situations out there. So I would say this: hey, try to get the best. Go to the best insurance provider you can go to, an agent or broker who understands community associations. So once they understand community association, and see how many community associations they are representing, so they will get the best deal for you. And then be prepared so that when you do have a quotation out there, that you did the best job of saying our association is a preferred association. And guess what? We should get preferred rates, because we understand the issues in terms of maintenance, how they can cause, what issues they can cause from liability and property losses. So we understand. So just be more aggressive when it comes to handling insurance, instead of taking a step back and saying, oh, what can we do? Say, these are things we've done to make us a better risk.
We've cleared our brush. We have an emergency procedure. We have fixed all the leaking hose bibs around the association. We fixed the gate around the fence. Make sure you are patting yourself on the back and telling the insurance company that you've done all these good things. And that's get on the good side of their list.
Great. We got a question from Judy in the chat. I'm going to let you read that.
Well, that's interesting. Okay, so she says she knows, I know the board can't make decisions. I think that she probably had something else in there too, but what kind of things do not need a board meeting? Small repairs, like $2,000 to dig up a drain, or a contract? Is this the type of thing, the cost? Well, technically, all that kind of thing should be, especially if you're expending money, that decision should be made in a board meeting. Typically, if an association will have a policy that if the manager or the management company has the ability to spend up to X amount of dollars, and if you have a management company, that's usually in their contract. So they have the ability to spend up to $750 on any one thing without board permission. And that means the next meeting they bring it to the board, and the board looks at it. Usually the board, or at least the board president, will know why they spent that, or something unusual that way. So and then the board can affirm the expenditure at the last meeting, at the next meeting, because they already had the policy that the association could spend that amount of money. So it's not really so much the type of thing, though sometimes it is. If the board's going to make a big policy decision, it's going to affect everybody. I mean, a big policy decision that's currently not going to cost money, but it might down the road. I would do that in a board meeting before anything goes into, goes into effect. So big policy decisions, expenditure of money, reserve expenditures, and I mean big reserve expenditures, that all kind of things should be in a board meeting, but sometimes it's not as easy to get everybody together immediately when something needs to happen. And though we kind of fudge on that sometimes, but yeah, I mean, they can make some decisions, but not all kinds of decisions. Anything, spending money, policy issues needs to go through the board meeting. It may be on the back end. We hate to do it that way, but sometimes it is.
Yeah, well, if you've got a leaking sprinkler line, you want to get that fixed, period.
Yep.
If you've got a leaky pipe there, you want to get that fixed. And number one priority is take care of the association. And yes, sometimes you get things a little bit out of order, but hopefully you have a policy that says board members can spend $2,000 a month or whatever the number is, take care of things, and then affirm it in the next board meeting saying, yes, that's what that was. And we did it. And I'm glad we found someone at home at 10 o'clock on a Friday night to be able to call the plumber and get that done.
Yeah.
And that's all the board's job is too, is to make decisions. That's all they do is make decisions. So they have to make them. And that's very important. They have to make those decisions.
Yeah, and if anything's a threat to life, limb, or property, obviously they need to get on that right away. They can't say, oh, we're going to call a board meeting before we fix that giant sinkhole. So,
a week from Tuesday. Yeah.
See you then. So you have to give them a little bit of leeway. It's not easy. I sat on a couple of HOA boards. I think I'm getting on another one too this fall. So, okay, it's not easy.
We got a bunch of questions, but I want to take a moment to just do a quick break from one of our sponsors.
Hi, I'm Kevin Davis, the president of Kevin Davis Insurance Services. Our experienced team of underwriters will help you when you get that declination. We provide the voice of reason, someone who will stand by you. Our underwriters bring years of knowledge to our clients that can't be automated by technology or driven by price. As a proud ANWINS company, we bring true value to your community association clients. We are your community association insurance experts.
Nice commercial, Kevin.
Yeah, look good, Kevin.
I don't know. I'm very critical of myself. Oh, I can't believe it. Thanks a lot.
Okay, I see a question on the screen. Can we use a portion of the interest earned from reserve fund investments to pay the federal taxes incurred? Yes. This is actually an accounting question, but in general, your reserves earn interest, and a fraction of that interest is taxable. And it's quite common that associations either pay that from the operating account or they skim a little bit from the reserve account to pay the tax. No big deal. It's a small amount, and don't worry about it.
All right, let's see what I have here. Oh, this was a comment back to something, Julie, you were talking about.
Announcing an actual audiovisual recording of all meetings keeps maintaining crowd control of members and the board. Yes, when people realize that they're on camera and it's going to get broadcast out to everybody else, they often have a tendency to mind their P's and Q's. On the other hand, sometimes you have the people who would like to grandstand in front of it, but I would say overall, that's a great idea. I think, it's interesting because you say doing the AV that way, you didn't say Zoom. And for when I talk to managers about, and board members, in fact, about having Zoom meetings, I have boards and managers who love those Zoom meetings because they can always hit the mute button on the person that is really a problem. But you can't, and for some reason, I guess people like to grandstand on Zoom, but on those AV meetings, you're right. That works really good. Thanks for bringing that up. Right.
Yeah. I wanted to bring up a question here. Where was it? Oh, here we go. Reserve study question.
Okay. What should we do in our annual reserve study review for items that projected a cost of a few $1,000s, but we were able to do them through volunteer labor for a fraction of that cost? Well, number one, good for you to be updating your reserve study. Make sure that your reserve study professional knows that they were done. knows that they were done in-house for maybe materials only. And so make sure that reserve study professional doesn't discount the cost, because you can't always rely on volunteer labor. And sometimes it's not wise to rely on volunteer labor when you need somebody with tools and skills. So make sure you update the reserve study, make sure the reserve study professional knows it got done, the fence got fixed, the drains got cleaned, whatever the minor project was, great. And let's make sure you don't anchor that professional cost to a volunteer cost. Kevin, any comments on volunteer labor?
Yeah, Kevin. My antenna went right up.
I'm wringing my hands as we speak.
Yeah.
Me too.
Be careful with volunteer labor. This is the one advice. Please budget, spend money for professionals. You have professional insurance professionals, you have accounting professionals, lawyers out there. Just spend a couple extra dollars and get someone who's knowledgeable about community associations and how to get things done the right way. You rely on volunteers, you're asking yourself for a lot of trouble in the long run. You are.
And what if a volunteer gets hurt on the job?
Yeah, exactly.
Yeah.
Mm-hmm.
Or it's a lousy job.
So many. Or just a lousy job. I mean, it's use professionals that specialize in community associations to protect yourself. You don't want to be on the other end and saying, he was my friend and we had known him for years, and all of a sudden you have a large lawsuit ahead of you because you didn't take the time to find somebody who understands the issues and help you out and charge you money for it. So that way you can hold them accountable.
Yep.
Well, we've got this comment here supporting what you guys said.
Yes, you have been informed again.
Oh, there we go. We should get that person on the podcast next time.
That's right.
All right. Along those lines, someone wants to know, do reserve analysts and specialists have to be engineers or architects to be qualified to do a reserve study?
Answer is no. The requirements for being a reserve specialist, that's a credentialed position, is that basically there's a background of experience, a background of education, and a demonstration that you know what the terms and definitions are, the right equations, the right math, all that kind of stuff. It's not a requirement that you be an engineer or architect. There is a field out there that is a field of structural inspections, infrastructure inspections, specialist inspections. And those people are great. They are complementary to reserve study professionals. Reserve study professionals are budget and cash flow experts. They are component generalists. And every once in a while, you do need an engineer or an architect to say, that crack in that balcony is minor, or that crack in that balcony is serious. We need to take a closer look at that. So separate engineers and architects from reserve study professionals.
Understood. All right. Kevin, you mentioned Florida and the structural integrity reserve study laws that they have. This question is, what legislation specifies elevators are not a CIRMS item?
Ooh.
Kathy, I think I can help that. There is the new legislation. We have a link to that on our website, reservestudy.com. Go to the Florida office, and there's a frequently asked questions that shows legislation there. But remember what the legislators were thinking. They were thinking, what can hurt people? And so they were thinking about the roofing, the structure, more of the infrastructure type things. To the best of my knowledge, no one ever got killed because they had to walk down the stairs or because they had to walk up the stairs. It's that kind of thinking that meant that the elevators didn't make I think it was the top 9 list or top 8 list of things that are structural integrity reserve study mandatory components. So if it can cause loss of life, those were the kind of things that were put on that list. If it was just inconvenience, then did not appear on the list.
Okay. How are HOAs who include utilities in their maintenance fees handling the rising rate trends in energy? Anybody?
They raise assessments.
They're raising assessments.
They're raising assessments. They have to. It's no joke. It's really bad.
That's the world that we live in right now.
Yep. All right. You're probably going to give us one last question here. We're getting to our 45-minute point. This is going to be an interesting one. In our HOA, one unit owner conducts a well-established business for years with 3 to 5 full-time employees on a daily basis. Can we force him to move his business out of our HOA?
Well, I would. Yeah, go ahead.
Julie, you go.
Go ahead. Well, it depends. I mean, first of all, the one strike against you is that this has been going on for years. And so you've kind of set a precedent of allowing this, right? Usually associations do allow people to have home-based businesses, but they cannot be intrusive. In other words, if you have 5 or 6 people working in somebody's house and they're parking in the wrong place, or it's loud or something, that could be a problem. And now, as we were talking about before, with everybody working at home, people are at home. There's a lot of people home-based, but having 4 or 5 folks there, and it's well established, it's been going on for years. My advice to you would be, I would talk to general counsel and see if this is something that you can enforce at this point, since you have been letting it go for a long time, because typically if you've been letting it go for years and it hasn't changed, that might be difficult for you to win. So that's number one. Number two, also obviously refer to your governing documents. I mean, a lot of them do address home-based businesses. So look at that, but general counsel would look at your documents first, general counsel second. And then they're going to ask, general counsel is going to ask you for documentation, what's going on, what the problems have been, how long it's been there, and he or she will certainly advise you on what your options are.
I would say it's in your best interest to limit your exposure. Okay. So having this company there and 3 or 4 people, that means now you could be held liable or something that happens there and you have no knowledge of. So what you're doing right now, and it sounds like you're making the right decision, is doing risk management and saying, wait a minute, because this is happening right now and it's the world we're living in, it's probably not in our best interest to continue this. So it's a great thought and a great decision that you are saying, we need to do something about it. So I agree. Yeah. It's a good idea.
Gotcha. All right. We have one final question here from Troy in our chat, and I'll show that to you guys.
Can we use operating funds for small reserve item expenses, or should we pay from reserves fund to track the item? Absolutely. If it is a small, reserves is the field of making estimates. And as I said earlier, it's budget and cash flow. And if you have some available cash to do a project, a minor fence repair, a minor roof repair, something like that, maybe you just tuck it in as an operating project. It doesn't have to be a reserve project just because it says roof. Probably the wiser suggestion is contact your reserve study provider, bounce the idea off of them, talk to them about how much it is. If it's $432, they're probably going to say operating account. If it's $4,320, that's when those are the kind of things you need to be talking to your reserve study professional about. Get their opinion, because they know your property and they know the scale of expenses at your association.
You guys up for one more question?
Sure.
Yeah.
All right, let's see what I got. Do we have anyone here? Here. Let's see what this one is.
Okay, I'll read it for everyone that's just listening. Association paid for an elevation survey that revealed we are not in any flood zone, but some units have mortgages requiring it. How to handle? Our government mandated recycling service just was increased. Sounds like 2 different questions. Our government mandated recycling service was just increased 25%. So flood zone or not, but some mortgages require flood zone insurance. If some mortgages, some units have special individual requirements, that's on them, right? Okay. And then the second part, our government mandated recycling service just was increased 25%. I'm sorry to hear that, but it's happening everywhere. Everything is getting expensive, and you need to have cash positive budgets, because costs are going to creep up mid-year and you're going to get caught short. So make sure you budget generously. It's the truth of the matter. And you're going to hear it from us. You're going to hear it from everyone else that life is expensive and owning real estate is expensive.
Yeah.
I may add one thing to that about it's interesting is that budgeting makes so much sense. If you budget correctly, people are a lot happier. Is that when you don't budget correctly, you don't raise your assessments, that's when people get upset. That's when people think you're not doing your job. They start calling you names and they start battling, and everyone's sitting in your board meetings and yelling and screaming at you. So,
You know, my world is roofing and painting and asphalt, and Kevin's world is board members screaming at each other.
yes.
And I think it's a lot more peaceful in my world.
It is.
Some of the stories I could tell.
Yeah.
Oh, yeah.
And Julie too. I mean, Julie deals with the same kind of things that we both deal with. And that's why it's so important to do these podcasts, let you share some of our knowledge with the people out there, let them know that if you do your job, if you budget correctly, if you pass rules, and your life's a lot easier. It's when you don't do these things is when you have these issues and you wonder what happened.
Yeah.
So
They got the wild, wild west at your association.
Yeah.
All right. Well, Robert, did you want to close this out before I run our outro?
I just wanted to say I hope you learned something from our HOA Insights episode here, and we look forward to having you join us next week. And I believe next week is Dawn Bauman talking about the Corporate Transparency Act. And 1 week after another, we love having you here, and it's our job to help you be a little better equipped and encouraged for the hard work you do as volunteer board members all across the country.
thank you.
Thank you, everybody.
Bye, everybody.
You've been listening to HOA Insights, common sense for common areas. You can listen to the show on our podcast website, hoainsights.org, or subscribe on any of the most popular podcast platforms. You can also watch the show on our YouTube channel. Check the show notes for helpful links. If you like the show and want to support the work we do, you can do so in a number of ways. The most important thing that you can do is engage in the conversation. Leave a question in the comment section on our YouTube videos. You can also email your questions or voice memos to podcast@reservestudy.com or leave us a voicemail at 805-203-3130. If you gain any insights from the show, please do us a huge favor by sharing the show with other board members that you know. You can also support us by supporting the brands that support this program. Please remember that the views and opinions expressed by the podcast do not constitute legal advice. You'll want to consult your own legal counsel before making any important decisions. Finally, this podcast was expertly mixed and mastered by Stokelight Video and Marketing. With Stokelight on your team, you'll reach more customers with marketing expertise that inspires action. See the show notes to connect with Stokelight.